Hey there, good morning, good afternoon, everybody. Hope everybody's doing well. Looking forward to the session. Welcome to the live trade session with myself, Charles Coughlin, and Paul Sanders.
Hey, Giles. Good
Good morning, Paul. How are you?
I'm great. How are you?
Yeah, I'm doing very well.
We'll be in
Actually,
2026.
I saw a very funny tweet today that I
No, the
was
Q&A
looking
segment
forward to
is
share with you all.
Okay. That's
This
good.
one here.
I saw this one.
Oh,
That's a good one. The entire Western world wants us to build up a huge army, march straight through Poland, and fight the Russians if necessary.
just writing it down so there's no misunderstandings. Yeah. It's a crazy old world we're living in at the moment, isn't it? So much shifting sands. It's
In terms of one of the opening questions,
Bang.
Lagarde has now just been asked whether the ECB considered a pause at today's meeting. So just
What's funny is
front.
there might be kind of a reliance on Germany going forward.
He's
you know,
also been
kind of
asked
yeah.
about
years
how the
later.
recent announcement from Germany could impact the outlook.
So we'll see. We'll see.
Oh yeah, big, the geography's great. Their position right smack up against Russia.
Yep. So we got day before NFP. So we'll see what we get today.
Yeah, and interesting. I wanted to start with this chart, Paul, because there's some very interesting developments going on here, and it's this Harami inside bar. This is also
Regardless, words change in the statement. It does have
Probably
meaning.
shut the squawk off. I don't know. Maybe there'd be something
it's
important
the
before.
ECB rate meeting. We'll just keep it on. I'm sorry, but
Yeah.
you've
That
got
makes
this press
sense.
conference. This is a pin bar inside bar combination.
Okay.
That can be very powerful to the upside.
Lagarde says they're moving to a more evolutionary approach. Lagarde says moving to a more evolutionary approach.
So that could easily be the bottom.
Stateside,
Yeah.
yes,
Turn around.
Johnson says he hopes to hold continuing resolution vote on Tuesday and expects a passage.
Or if it goes down to 5,730, I would expect it to be bought back up. So buyers will be very eager down here.
Yeah.
And maybe I'll step in here. So I am looking for a turnaround today.
That does make a lot of sense.
Yeah, so I think it's just worth being aware of that. Now, the negatives, obviously, we've got so many geopolitical headlines doing the rounds,
Yeah.
and risk is off. So, taking a look at the VIX, you can see we're still holding above that resistance level, and we're still above this sort of big level. We tried to push back to yesterday, we're now pushing above higher. So that's the first thing to be aware of, just where we're positioned. Nice area for potential turnaround. So we'll just keep our eye carefully on the VIX. But sentiment is negative out there. All equity futures are lower. FTSE 100 lower. DAX is off the highs, heading towards negative. Euro Stoxx lower. It's only China bucking the trend.
Okay.
So, and a bit of a sell-off happening in bonds. Look at that German move. I think that was the biggest intraday move in the German Bund for over 20 plus years.
Now, what does that mean? Explain that. Explain why. How is that? Why is the market? Because I've seen a couple tweets about that. Why is the market paying attention to that? And how does it affect everything more broadly?
Harker says is increasingly worried about the state of government deficits.
So it's basically with the German fiscal announcement that they're going to be looser with their fiscal spending. That means that that's an inflationary force. So there's going to be a lot of money pumped into the German economy.
It's still a work in progress.
And it means that interest rates from the ECB are more likely to stay higher for longer. And what people are talking about is this move in German bunds.
So the ECB needs time to understand the impact of these recent fiscal announcements. So again, it does appear that it will not necessarily be having an immediate impact on ECB policy, with Lagarde noting the ECB needs time to understand the impact of these announcements.
And you can see big move in UK gilts as well. It's not being reflected in the US. So the same inflationary forces aren't being seen in the US as they are in Europe.
I didn't hear that last part.
Yeah, so the same inflationary forces in the US aren't being seen to be impacting the same way in Europe, because Europe is about to boost its defense spending. So that's seen as inflation.
Okay.
So there's sort of big moves happening basically, and that is also underpinning that euro rally. And also the dollar weakness is partly that Europe is going to be more inflationary than the US in the near term. So there's a sudden shift. Whether that lasts or not remains to be seen, but that's basically what's happening.
Okay. Interesting. So it's following the trend of central banks across the world wanting to loosen policy a little bit, or at least the market's speculating on that. Like we're thinking about cuts from the Fed, that sort of thing.
So I think it's more that there's going to be a lot of spending in Europe.
Oh, so, okay, fiscal. Okay.
Yeah, so that spending is going to be inflationary. So interest rates might have to be sort of higher for longer.
Oh, so the opposite then. Okay.
Yeah, so that's what Lagarde just said. She said monetary policy is becoming meaningfully less restrictive. So if you look at the short-term interest rate markets, you can see that there's this higher for longer expectation now than there was before the meeting. So in other words, that there's a concern that the interest rates have kind of like, they're not restrictive enough.
Yeah.
So they're going to have to stay more restrictive, and that's supporting the German Bund yield. So they're selling off on that inflation expectations, plus the fact that on top of it, Germany's saying, well, we're going to have to boost a whole load of spending to try and stimulate our economy. And that means, okay, well, interest rates may need to be even higher for longer because that's going to be inflationary.
So they're not working in coordination with the central bank then, essentially. They're doing their own thing, spending from the government side, and then the central bank is saying, well, that'll be inflationary, so we might keep rates higher for longer. So they're kind of like opposing forces.
Yeah, in a way, and it's because the Germany's had that change of government, and so the new government's come in, and they're thinking, because German growth has been really subdued for such a long time, then there's been a change of government, so the new government's come in and saying, right, how can we stimulate this growth? And the concern is, like, if they're doing something, if it's seen as reckless what they're doing, then the bond market throws a wobble. So is this a wobble, or is this just a genuine repricing? Because obviously this has happened in the UK with Chancellor Reeves. And remember Liz Truss famously, when the UK was struggling with inflation, and she said, right, we're going to spend. So she was like, we're going to fiscally boost an economy that's struggling with inflation. And the bond market nearly collapsed. Do you know what I mean?
Yeah.
It was crazy. So I don't know if there's a little bit of, to me, this seems like a normal fair repricing. But at what point does the market become too worried? And they might look at something like the Italian-German bond yield spread. Like if that sort of becomes too wide, that can be indicative that there's a problem.
Okay.
So I'd say at the moment there's so many different factors out there. Yeah, Najem, that is hawkish from the ECB. And the hawkish line is basically what the ECB have said is...
Lagarde just noting that uncertainty is huge.
Yeah, it's basically, we don't know what's going to happen. We're not sure on the path of inflation. We're not sure on the path of growth. We're going to have to take it case by case, but monetary policy is becoming meaningfully less restrictive.
Yeah.
And that's changed the line before, which is monetary policy remains restrictive. So just saying it's less restrictive now. Okay. That's what's supporting the euro. And the euro's further supported by the dollar, which keeps falling lower and lower and lower. Right? And that makes sense with interest rate expectations increasing. We've seen that, haven't we, with the Fed? One stage it was like 1, then it was 2 interest rate cuts, and now at the moment markets are expecting December 3.56. So about 3 interest rate cuts now expected at the end of this year, and that's pressuring the dollar.
Yeah.
And then you got all this geopolitical risk and this sudden bounce of risk off that come in. So that's kind of what's pushing us around. Does that make sense?
Yeah.
Yeah. Okay. And on top of that, we've got the non-farm payrolls tomorrow, and we've had all these conflicting jobs data. So initial jobless claims has just come out, and that's really good. Look at that initial jobless claims. So less people claiming jobless benefits. Strong US labour market. Then we had ADP jobs, which came in under market's minimum expectations, which was negative. Then we had the contradiction from the ISM print, which is the more influential survey that came yesterday. Look, 53.5, good. And then we saw the employment part of that. Let's just go over here. We saw the employment part of that strong as well. Look at the employment end. Where is it? Prices paid. Wait, hang on. Am I looking at this correctly? The employment, that looks a bit weaker, actually, doesn't it? Am I seeing things? Have I got the right date? Let me just check this. The employment is 47.6. That is a bit lower. I could have sworn that was higher. Maybe it's just my brain playing tricks on me. But the prices, that's inflationary. Have I got the, let me just, Monday the 3rd of March. No, got the wrong day. That's why.
Yeah.
That's better. Right.
There we go.
So here's the services PMI. Look, high, and then the employment index at 53.9. So that's an expansionary territory. So US consumer confidence, and remember the University of Michigan inflation expectations. Do you remember how they were higher as well? And the thing with those data points, they're all soft data. They're all surveys.
Yeah.
So the important thing is, what's the hard data doing? And the initial jobless claims fine. The ADP jobs was weak, and we've got non-farm payrolls on Friday. But the latest ISM contradicts some of those soft data points here, 53.9. So that's healthy. So, you know, remains to be seen what happens on non-farm payroll.
Lagarde says the decision was a consensus and nobody opposed. Saying Lagarde says the decision was a consensus and nobody opposed.
Yeah, the euro is the anti-dollar. Yeah, so basically, just consider the euro, US dollar, the anti-dollar index. It's always been the opposite. And that's because historically they're the two big power trading blocks in the world, Europe and the US. So what the dollar's doing is antithetical to what the euro's doing. The dollar down, euro dollar up, and it's very closely correlated. There's hardly any ever time when that correlation breaks down. Yeah, that's fine. So on top of all that sort of mess, we've got the Powell speaking at 5:30 today. Got Waller speaking at 8:30 UK today. That's sort of towards sort of 3:30, 4 o'clock your time. We've got Catherine Mann speaking at 3 p.m. That's 10 a.m. Eastern. And she was the one that voted for a 50 basis point rate cut when everyone else wanted for a 25 basis point rate cut in the UK. So that could move the pound. And we've also got Lagarde speaking again at 3:30. Remember, we'll have a whole flurry of commentary from the ECB because they basically do their announcement in 4 stages. They have the rate statement, stage 1. They have the press conference, which is going on now. And then they often have 2 or 3 sources reports that come out after the press conference. So basically there's 3 or 4 times that the ECB has to move the market. So just be aware of that. It's a right pig, but you just have to be aware of that. And then we got bond auction at 4. So not much in terms of top tier US data, but quite a few little itty bits that are coming out throughout the day. So sentiment is, as we start the session, negative and risk is off. And you can see that in the currency space with the yen and the Swiss franc leading the pack. You got the Aussie, the CAD towards the lower end, particularly CAD being hit with oil prices being hit on sort of lots of US supply out there. So markets are risk off, and we can see that in the equity space, pressure to the downside. But we're at crucial support levels: 200 moving average in the Nasdaq, 200 moving average in the mini, and then we've got NFP tomorrow. So do markets want market? There's no reason why they can't keep going down. but we're just going to be aware we're in very nice support area here. All right. So in terms of the E-mini itself, just we'll start by zooming out and then zoom in. We've got this sort of trend line that's those 3 days of price that we're forming in. We're also towards the bottom of the value area low that's developing for the week, and we're just sitting under the point of control for the week, and we've got some sellers who are quite heavy there at the 5791. So first area to be aware of is if we get up above that 5791 area, that's above the point of control and trapping those sellers. So that's important. We'll mark that on the 5791. Yeah. So you've got that 5791 trapping these sellers, and you've got these sellers trapped here in that developed value area that we're sitting in. So we're sat in a nice
from Lagarde
area.
If data indicates that a cut is appropriate, then they will cut, and they'll pause if data indicates. So ECB just noting a flexible approach here, noting that if data does require a cut, then they will cut, but they will pause if the data indicates doing so.
Okay, so ECB just maintaining optionality, but it is slightly more hawkish, the stance they've taken. This is the support area, and notice how we've had these buyers trapping these sellers. So there are some sellers trapped down there on the first standard deviation. We're trying to find a little base here. Looking at the inventory, you can see the inventory is positive for the session from the overnight session, and then we're coming into a slowing trend. It has been a fast trend lower, and now it's just showing signs of slowing and potential bottoming. We still have got a downtrend
based on short-term market moves, adding limited spread variation despite massive yields moves.
So apart from that, you've got all these sellers down here. Would be nice to see them trapped. This would be a nice
Palestinian
area going higher.
Arabia. The United States has offered Hamas a 2-month ceasefire in exchange for the release of 10 Israeli hostages alive, as well as the opening of the crossings and the resumption of the supply of humanitarian aid to Gaza. And does note that Hamas is examining this proposal.
Okay, so that's really what I'm looking at. Paul, anything grabbing your attention? What's your thoughts on the day? The outlook, the general geopolitical situation, anything in particular that's grabbing your attention?
Not too much. Just wait and see what we get today.
All right. Okay. Okay, so those sellers just trapping those buyers there, continuing its way down. VIX is continuing its way higher, so sentiment is still negative. See the VIX up at the highs of the day. NASDAQ down at the lows of the day. Everything's down.
Lagarde says they had a lively discussion and it was intense.
Who's having a lively discussion?
Usually Trump, whenever...
Yeah, it has to be.
Has to be Trump.
A lively discussion that was tense. Sounds about right.
Well, it's not like a lively discussion with Biden.
ES now down 1.5%, NASDAQ down 2%, with some of the chip names lagging following the latest update from Marvell. And elsewhere, the Russell, that's down 1.7%.
Sells carrying on. That's the vibe of the day. I'm happy to have a little sell off that point of control if I can get back up to it. Just to see if I can get in on that.
Yeah, I think your prediction's going to come true today that we're gonna go higher, but we'll see. Just based on those pushes lower.
Yeah.
And the technical setup.
Just seeing remarks from Russia. They say the speech by France's Macron contains notes of nuclear blackmail.
Yeah, okay. Give it a little chance. I think we're heading back the other way. Right, I'm going to try long here. heading back the other way, stops just underneath these lows, and see if that's the low for the day. VIX is slightly pulling off its highs. Nasdaq still very pressure to the downside. There's a lot of volume that came in there. Look at that, 1,500 contracts on the get-go.
Yeah, it's like feels like we're gonna go down, try to maybe test those lows.
Yeah.
Just making you aware of the latest remarks from Canadian PM Trudeau. Says Canada is continuing to talk to the US administration. Its goal is to get tariffs lifted.
Okay, Canada. We'll see how that works out for you.
Yeah. All right, well, that's not the bottom.
Yep. Still moving lower here.
Volatility back up the highs of the day.
Yep.
Right there. Nasdaq, Dow lower, everything lower. Right, we have another go at a short, just as we're coming back up to this area, and see if we can get another go at this.
Okay.
I do like it. Just got those sort of buyers trapped up there. Looks like we've got a little leg lower. I do like this area because it's just that one standard deviation. Got the buyers trapped there, sellers on volume, so that feels a nice place for sellers to come back in.
Yeah, the counter argument is that like you were pointing out early in the session, I mean, these would be sort of the areas for it to turn around, right?
That's true.
But it's just about managing that entry, I guess.
Just under 10 minutes now to the next set of US data. Are looking out for wholesale sales monthly change, as well as revisions to wholesale inventory. In terms of those revisions, they're seen unrevised at 0.7%.
Yeah, I'm out of that.
See, your prediction is coming true. See what's going on here.
Yeah. VIX continues its way down lower.
That's good.
Yeah, if we can get underneath that 22, this is just setting up for rocket ship.
Yeah, if we get a good good NFP to catalyze it tomorrow. By good,
Yeah.
I mean, would we actually have to get a bad NFP in this case? Because that might mean cuts quicker.
Yeah,
See what I mean? It's tricky.
this is where it's hard. So that it's very tricky because the dynamic is shifting.
Yeah.
If you get a strong data point, that should be negative for stocks. But I'm just after today's price action and all the sort of optimism that you can just feel buzzing around about tariffs and trade.
Yeah.
I would be hesitant. I'd have to think because if it's a bad number, you'd expect the snap reaction to be lower. But then the dip could be bought on the fact that the Fed has been wanting to cut interest rates.
Exactly.
But if the US labor market is not hiring, and confidence is down and spending is going to be down, then you could see the S&P 500 falling for a bit, for some amount, until that hope of cuts steps in.
Right.
So actually, you know what the best would be? A slightly weak number.
Yeah.
And then buy the dip.
Oh, interesting.
That would be the best. Slightly weak, just slightly off the headline. Maybe 50,000 off the headline, and then the dip will just rip higher.
Yeah.
All right, Paul, should we wrap it? I think I'm just fixated on it to see if it hits the 70 or not, but I think it will. All right then.
Great.
Take care, everyone.
Take care, everybody.